let's talk to someone who's overweight on China. Daphne Roth, the head of Asian equity research at ABN Amro Private Bank, which oversees about $211 billion in assets, joins us this morning. Daphne, good to see you once again. So you're overweight on China. What's the thinking?
Yes, we are overweight China because, valuation is very cheap, and inflationary pressure also have peaked last year. So it will give the government, actually more flexibility to moderate, policy. We do not expect the banks, the central banks to cut monetary policy rates, but we do expect them to cut, the required reserve because it's at all-time high, and that should help the banks to give up more loans. So banks are also a big part of the HSI or the H-share market, and they are also trading very cheaply. So if loan growth is expected around 8 trillion renminbi, so we have loan growth of 14–15%, and as a result, banks are quite cheap at the moment. So that is one of our
Daphne?
reasons.
Is that the only thing you like in China? Yeah.
We do like banks, and we also like the consumption story, but it's a little bit hard to play in China itself because there are very few listed consumer stocks, and everybody seems to be playing that, the last couple of years. As a result, valuation is quite expensive. So one of our top picks is China Resources. That is the other part that we like.
Yeah. Okay, Daphne, how concerned are you about Europe, again, rearing its head because we have the Spanish debt auction, again, disappointing, and it looks like the market's really reacted. Your concerns?
I think the systemic risk has abated, compared to last year, but I have to say that we are not completely out of the woods as, sovereign debt issue seems to be creeping out again. And the ECB has also highlighted that, inflationary pressure is again creeping. So we will be watching that, but we are not as concerned as last year.
Okay, not as concerned as last year. What about the U.S. recovery? Is it for real? We got those non-farm payrolls due out. How close are you monitoring those jobs numbers?
Yes, if you look at the job numbers or some of the other indicators, it does seem that the U.S. is, on its slow way to recovery. So we still think that the U.S. could grow, about 2.5%, and that is in line with what the Fed said too. But of course, it's still growing below potential, but it is, it is not going into a double dip. So we are less worried about that too.
Now, and interesting, Daphne, you're overweight China, overweight Indonesia, overweight Malaysia, but underweight, the sole underweight is India. What are you seeing?
India, we still believe that valuation, although last year underperformance have made valuation a little bit cheaper, relative to the region, it is still quite expensive, and we are still very concerned about policy risk. I think what is helping India at the moment is, of course, inflationary pressure has gone down, and with the improvement in Europe, credit cost has also come down, so that has helped it. But I'm afraid that looking at the recent state results, that there seems to be still some sort of policy in action. As a result, companies are not really embarking on a lot of corporate investment. So I believe that is going to be something of an issue for India. And we are also seeing that not much of structural reforms have been embarked on, and so infrastructure will continue to be an impediment to inflationary pressure. So that is our major concern.
Daphne, good to see you. Enjoyed the Easter weekend. Daphne Roth there at ABN Amro Private Bank.